I'll be the first one to admit, you know, investing sounds complicated when you're first starting. You hear words like stocks, index funds, dividends, market crashes, market runs, and it definitely sounds like a very nerve wracking thing. And like I said, I'm definitely one of the first ones that will definitely admit that to you. So, I mean, honestly though, I don't think it's as complicated as it, or I know it's not as complicated as it is. Most people just really overcomplicate it, so that's what I want to cover in this video. So, I mean, if you're interested in starting up your investing journey, or you're a seasoned investor and you just want to, critique this advice, feel free to stay tuned and enjoy the ride. So, I think investing isn't gambling. It's ownership. You're buying into a company, and you're ultimately playing the long game. Don't get into investing thinking you're gonna get rich quick, like a lot of social media gurus might tell you. So for my beginners, when you buy a stock, you're actually buying a small piece of a company. You're not buying a number on a screen. You're not buying a lottery ticket. You're buying a real piece of a business. So, for example, if you own shares of Apple, you own a tiny slice of Apple. If the company grows over time, your piece becomes more valuable. If you bought it at $10, let's just say, obviously, Apple is not $10 a share, but let's just say you bought it at $10, and eventually it gets to $15, $20. You made that extra. You made that extra money on your investment, and like I said, your piece becomes more valuable over time. And with this said, it kind of explains to you right there. The stock market isn't magic. It's not some random numbers generated out of nowhere. It's honestly just people buying and selling ownership in businesses. So I will say one of the biggest mistakes where beginners mess up, they try to get rich fast. I mentioned this a little bit earlier, but they follow influencers, or they follow the crypto bros on social media. They will go and just buy random stocks they hear, or they saw on TikTok that people were like, "Oh, you need to buy this. Oh, it's gonna blow up. You're gonna make a bunch of money." They check their portfolio every hour. They tend to panic when the market has a rough day or a rough couple days. When you're in a bear market, they freak out and they sell all their money, or they sell all their investments in a business because they think everything's going downhill. Investing done correctly, I will admit, is kind of boring. That slow growth, and you're looking at long-term horizons, easily the next 20 to 30 years of your life. And, I will say, boring investing is usually the profitable investing in the long haul. Like I said, if you're trying to get rich quick, investing is really not the avenue you want to take. Like I said, it's not really the get rich quick scheme. I mean, sure, you can buy in at a dip, and the market has a nice rush the next couple days or weeks, and you make some money, sure, without a doubt. But long term is just the goal here. Like I said, if you're trying to make a bunch of money really quickly, it's probably not the best avenue to take. So if you are a beginner, this is what I would tell you today. You would open up a brokerage account, whether that would be through Fidelity, Vanguard, Schwab, pretty much mainstream platforms. Feel free to Google that, do your research on which one you would suit you better. Me personally, I recommend Fidelity. I'm a little biased because I use Fidelity. Just easy user interface, very easy to navigate. So I would recommend that one personally. But like I said, do your research. Maybe your company that you're at currently uses Fidelity, or it currently uses Vanguard through like a 401k system, or whatever the case is. And I will say, don't worry about buying single stocks, especially as a beginner, and probably as my seasoned guys would probably recommend as well. I typically just ignore stocks altogether. I started with and I continually invest in just broad index funds. Think of funds that follow the S&P 500 or the total market index fund, whatever the case is. Invest consistently, monthly if possible. I think that's the best way because, stocks may be a little lower January, so you can buy more or you get more value out of your monthly funds towards your investing, while February might bump up a little so you don't get as many, so you don't get as high a portion of that index fund. So I would just say consistently try to do monthly, try not to dump all of the money that you want to invest for the year in January and then don't invest the rest of the year. Doesn't really make sense, that might be obvious, but I just thought I'd throw it out there. And then, like I said, investing is a long game. It's a long race. It's a marathon, not a sprint. So when you're investing, think in years, not weeks. If you want to do this consistently, you're probably looking at easily the next 20, 30 years of your life. You're going to be investing into the stock market, into these index funds, and just watching it grow over the years. And, you may be wondering, like what is an index fund? I probably should have explained that a little earlier, but an index fund is basically buying a basket of companies. So instead of just buying the Apple stock, you're buying a basket of companies. Instead of trying to guess that one winner or that one company that's going to blow up in the next year, whatever. And like I said before, you're not trying to beat the market. You're just trying to grow with the market because, I think they've said, over the last couple decades, companies, or excuse me, the stock market has increasingly gone up in value. I think like average is around 10%. And, if you adjust for inflation, which is 2.5 to 3% a year, you're looking at, the stock market going up 7% yearly or on average the last couple decades. So ultimately what I'm telling you is unless, a nuke goes off or the world's coming to an end, very high chance of you continually making money as you invest. And I want to cover emotions because that is definitely a big topic or a big area that could mess you up when it comes to investing or sticking through the tough times. And, I will say, even after this 10-minute video, I would hope, hopefully I do a good job or a good enough job where my beginners feel a little more comfortable with investing, understanding what a stock is, what the market is, expected returns, et cetera, et cetera. So that's not the hard part. The hard part is controlling your emotions. I mean, the sad reality, I guess if you want to call it a sad reality, or the being realistic, the stock market will go down. We will have bear markets, we'll have bull markets, where the market's up. It feels uncomfortable. It sucks. I try to check my portfolio once a week, usually like a Saturday or Sunday, because that's usually like if it's the time during the month that I put money into my my portfolio. That's when I typically do it, Saturdays or Sundays, and I try to check it once a week. I try not to check it any more than that because I may go a little stir crazy, but it's definitely uncomfortable. It's definitely a little nerve wracking when you see when you check the market that day that it's in the red or it's down or it's negative. You've seen a loss, but I mean, if you can handle those short-term drops, long-term investing, it will only benefit you, your family, and future generations. If you want to develop generational wealth for when you're no longer around. And as I was told, and as I try to tell every new person that I chat with, or even seasoned investors, time in the market always beats timing the market. So just don't rush it, relax. You're going to see drops, you're going to see, increases, you're going to see, when the bear market, takes a run up and just shoots up. You're going to see both. So just learn to take the bear markets. So if you take anything away from this video, I think it would be like, you don't need to be a genius to invest. I thought that when I first started. I have some people in my life that are super nervous or don't want to touch investing because they're not familiar with it. They think it's rocket science. But you don't need to perfect the timing. You don't need that crazy knowledge. You don't need to go to school to be a financial advisor. Just you just need a phone, some internet, and just doing your research. Or self plug for myself, this video. And you don't need to be a millionaire. You don't need to be well off in life to start investing. You don't need thousands of dollars a month. You just need consistency. And, even $100 a month will compound over time. Obviously, if you can put more money than $100 a month into these funds, into these index funds, into your investment portfolio, that's great. I would recommend it. It would just, increase your end goal money when it comes to time to pull that money out for retirement funds. But yeah, so pick a value, pick a healthy number that you can safely, comfortably invest monthly into these accounts. You're golden. And I will say, I'll reiterate again, most people don't fail at investing because it's hard. They really fail because it's, because they just never start. And like I said, a lot of people, get nervous or, they get anxious when it comes to investing. Like, oh, I don't know what I'm doing. I don't know what these words mean, what these numbers do, like, oh, the market's up and down. All I hear is market crash. Like, this AI bubble is going to blow up and like everyone's going to lose all their money. But, we've had booms in the past, the .com era, like the internet boom, whatever. So I think a lot of these people, they fail because they just never start. If the market blows up and everything goes to zero, I think we have bigger issues in the world than, worrying about the stock market. Chances are, nukes are probably flying around and, it's probably the end of the world. That's probably the least of your worries, that the market's crashing, to $0. Chances are something bigger is going on. But side rant aside, like I said, if you're a beginner, don't overthink it. Start small, stay consistent on a monthly basis, and give it time. You're like I said, this is going to be at least a 20 to 30 year journey. At least, I'm just being generous there. So, buckle in for the ride, and learn lots along the way. So, I'm wrapping it up there. I hope this helps my newbie investors and, for my seasoned investors who maybe stuck around to watch the video. Did I miss anything? Leave your thoughts in the comments, and as always, welcome to the lunch table. Take care.